Hey there, welcome to Nappy Invest. Now, I was going to do this video on the weekend, February 20th or 21st, but things have happened where I've just decided to bring it forward by 1 or 2 days. And the reason why I've just brought it forward was because the whole point of this video was focusing on illiquid companies that release their Appendix 4C. Now, if you know anything about illiquid companies, you know sometimes they don't trade every day. Sometimes you could see them not trading for a week, even months at a time. So I thought I had a bit of time on my side in doing this video. How wrong could I be? So what I do at the end of every trading day is I scan the ASX looking for examples of companies that have increased in share price and typically above 10% in one day on really, really high volume. And when I'm talking about high volume, I'm looking at the company in particular, not the general market. So I'm looking at the previous 50 days trading in this company and comparing the volume on that day compared to the previous 50 days. And the first company that jumped out when I did the scan was Aqueous Entertainment. And this was one of the companies I was featuring in my video. And it sounded quite funny because my whole point of the video was looking at illiquid companies. And all of a sudden, Aqueous Entertainment had become a liquid company, massive increase in volume. Now, the share price increased 211%. And the volume compared to the previous 50 days was 2,857% higher. Now, the funny thing or interesting thing was this company did not release any announcement at all. In fact, the share price increase, that 211% increase, happened in a 2-hour window between about 11 a.m. and 1 p.m. And then the company went to its trading halt because they had or received an ASX price query. So the ASX wanted to know, why has the share price increased 211% with a massive increase in volume? Why has that happened? And the company said, we don't know. And this just shows you the amount of speculation, the increase in speculation in the markets right now. And that should be a massive warning signal to us all. So now let's focus on the 3 illiquid companies I'll be focusing on this video. And the first company I'll be looking at is Threat Protect, ticker code TPS. This company is into security monitoring and solutions, which is interesting, because one of the companies I focused on in yesterday's video was MCS Services. Now, MCS Services is into physical security, so they provide security guards. And I was talking about in that video how they should be looking at maybe trying to diversify into higher margin business streams. And then I was thinking about it this morning that maybe MCS Services and Threat Protect could merge, or one could buy out the other because they're both relatively cheap. And if they do merge or one buys out the other, there's going to be some synergies there. And I really hate to use financial buzzwords, but there would be some synergies there. And when you combine the forces of these two companies, I think you'd be a more highly, you got revenue above $50 million, you'd have probably higher margins overall. It would be profitable more than likely, operational cash flow positive. So I think there is that possibility of that sort of consolidation within this sector. Now, in the last financial year, they were operational cash flow negative to the tune of 4.4, but it looks like things have changed or turned around when you looked at the most recent quarterly cash flow report, which is here. So this is their operational cash flow from the most recent quarter. And the thing that really strikes out to me when I look at this is that bottom number right down below there, operational cash flow positive, $1.4 million. So this company, which has a market cap of 12 million, brought in cash to the tune of 1.4. That's in one quarter. If you can't really extrapolate that for the whole year, I wish you could, but that would mean they were operational cash flow positive for the whole year of $5 million, and that would make this the buy of the century, because with a market cap of $12 million and cash coming in the door of $5 million, that would be insanely cheap. Anyway, they did have some borrowings and they repaid loans of $2 million with the cash they brought in the door and brought in the business. And even though they did lower their cash on hand from 3.5 million to 2.4, I think it's a very smart thing to repay loans. Now, the most important thing is when I look at receipts is to look at the trend. And naturally enough, they did have increasing trend between October 2015 and October 2019. It went from just above $1 million to 7.5. So really good trend. Although the trend seems to have flattened in the past 6 quarters and maybe this company has been impacted by COVID-19. But overall, since 2015, the compound quarterly growth rate in cash receipts is 9.1% per quarter, and that's pretty good. I would like to see if this or that trend sort of continues once we go past COVID-19, the impacts of that virus or pandemic anyway. And it looks like things may have turned around in the last quarter, but that remains to be seen. Now we get to the liquid part. So if you don't understand what a liquid means, it means the shares are not traded all that often. If you look at Telstra or any big companies on the ASX, they are almost traded every single second of the day. Sometimes with companies like these, very liquid companies, they might not be traded for days and days. In fact, sometimes months and months. So you can just look at the candlestick chart on the top there. You can see little gaps in the candlesticks. That means it's not traded for some days. Even in the volume, there's big peaks in the volume. So sometimes a lot is traded, sometimes nothing is traded at all. So I have found in the past, companies that are highly liquid do become liquid. And when that happens, they go from highly liquid to liquid, the share price tends to increase quite substantially. So that could happen with Threat Protect. The other interesting thing about this company is the share price is almost at all-time lows. So even though they are operational cash flow positive, the market really hasn't got onto this just yet. So I think this is quite attractive at these sort of prices between 4 and 5 cents. Very attractive. And I am thinking about putting in a very small parcel in Threat Protect, looking at the longer term. And when you look at the three-year weekly chart, you can see, but going back 3 years ago, the share price was trading between 15 and 20 cents. And then between April 2019 and April 2020, share price went from trading between 15 and 20, is now trading between about 4 and 7 cents. So again, I think there is potential for this to be attractive long-term buy. And I think you'd have to have patience. This is a sort of company you just can't buy and expect to sell out whenever you need the cash. You'd have to potentially wait for maybe a few days, a week or so to sell out. So I think this would be attractive to those who are willing to hold for the long term. Now to the stock of the day, perhaps the stock of the week, the month, the year, Aqueous Entertainment. This company runs Casino Canberra, which I didn't even know existed. When I did the setup of this presentation, the market cap of this company was $6.9 million. It's significantly higher now because of the speculative bubble that's existing within the share price of this company as I speak. So I'm doing this video 37 minutes after opening of the markets. I just had a look at the share price. The share price was up about 400% today. Now, there could be some argument that we're not in a speculative bubble. We are. This is proof that we're in a speculative bubble. The share price of a company can increase 400% in one day on no news. There is no doubt we're right now in a massive speculative bubble when you see that sort of behavior in the stock market. And typically when this behavior exists, it is or it precedes a significant downturn. Now, it might not happen this time, but it has always happened in the past. Anyway, so the market cap of this company was $6.9 million before we saw this massive share price increase. Revenue 18.4 in the previous financial year. Operational cash flow negative 0.7. So let's have a look at what's happening right now at 9:38 a.m. So I just went to ComSec website to see what's happening with the Aquis share price, and up 552% in 45 minutes of trading. This is just nuts. This is ridiculous. You could have bought Aquis yesterday morning between 10 and 11:30 a.m. at 3.7 cents. The fact that it's gone up, 2,000% or so since then is just ridiculous. It's stupid. It's insanity. It's just showing what stage of the market we're in, that we're in a sort of a speculative bubble, speculative stage of the market, and it's usually a bad sign. The fact that you can get a share price of a company increasing 552% in 50 minutes on nothing, no news has been released by the companies and nothing, and what's been driving this upwards and onwards is just FOMO, speculation, gambling. And usually when that sort of drives a share price, that usually means it's all going to end in tears for a lot of people who are buying right now. So more than likely, the share price won't rise up much by this for an extended period of time anyway. More than likely, the risk is the share price will pull back by a substantial amount. So anyway, good luck for those who are buying right now. I wish you all the best, but more than likely, this is going to be a massive and painful learning experience for you. Now, the whole point of doing Aqueous Entertainment in this video was to look at their Appendix 4C for the previous quarter. So this is their cash flow from operating activities on the left, and it is quite interesting when I did have a look at that. That's the whole reason I've included it in this video. So receipts from customers was an all-time high, or close to an all-time high, $9.4 million. And right at the bottom there is the reason why this did actually pique my interest. Operational cash flow positive, $2.9 million. And even take into account their government grants and tax incentives, which was probably some job seeker there, or job keeper, whatever it's called, they still were operational cash flow positive by 1.6 million. Some other interesting things is the market cap was lower than the cash on hand. So the market cap of 6.9 million was lower than the cash on hand they had at the end of the quarter, which was $7.3 million. So that did raise some interest, but then I had a look at the amount of debt they had, which was above 30 million. So when you look at the enterprise value of the company, it's about 37 million. And they did repay some loans of $2 million because of the cash they produced in operations, but still a lot of debt they do have to repay. And of course, I always like to look at the trend of cash receipts, and the trend is really interesting here because really there is none or no trend. So if you go back from January 2016 to most previous quarter, October 20, the trend is sideways. So we've just seen a bit of a peak in the upwards in the receipts in the last quarter. So this was a record high. And if you go back to October 15, which was a bit of a low, it has grown at 5.3% per quarter. But between January 2016 and October 2020, it's gone sideways. So there's no real upwards trend in the cash receipts for Aqueous Entertainment. Now we get to the liquid part of the story here. And this company has historically been illiquidly traded. Particularly if you go back to May 2020 and around August, September 2020, it was barely traded at all. We have seen a bit of a pickup in trading over the past few weeks, which could have been a harbinger for what we're seeing over the past 4 or 5 hours in trading. And the share price has reached a bit of a peak in the share price at 3.7 cents before the massive increase in share price, of course, over the last 4 or 5 hours in trading. So illiquidly traded here, but it did raise my interest simply because we did see a bit of a pickup in the trading over the past about a month or so. You can definitely see the amount of liquidity in this stock over the past 3 years when you look at the weekly chart, and the slight pickup in trading over the past, say, actually 4 or 5 months, and just a downward trend in the share price, and we've seen a bit of a pickup in the share price. But again, the peak in the share price over the past 3 years has been about 5 cents. So there's no reason for this to be trading at about 75 cents or wherever it was last time I looked. So the last company I'll be looking at is TTA Holdings. Had a really hard time finding a logo, a really good logo. So this is the best quality logo I could find. This is a very small company. They distribute TAC, TAS, I'm not even sure what it is, branded audio and visual consumer electronic products in Australia. So they're sort of a reseller of this company's equipment. Market cap 3.4 million. So the last financial year, they had revenue of 3.1, operational cash flow negative. Well, you know, almost operational cash flow neutral. So a very small company on the ASX, and this company is the very definition of a liquid traded company. So the most recent quarterly cash flow report, receipts from customers 2.9 million, operational cash flow negative 221,000. So nothing really interested me there. Began the quarter with $541,000 in cash and finished it with 1.5 million. Now they repaid some loans, $2.8 million, but they sold land. If I remember correctly, they sold some land and they got $4.1 million by selling that land, but they do have to release back that land if they want to, which means this was sort of just a cash grab, and so they can repay some loans and get a bit more cash on hand. Revenue history, well, this is looking fairly ugly if you ask me. So the peak in revenue, actually, now the reason I'm showing you this is they've only started doing their Appendix 4C, and not this quarter, the previous quarter. So they only have 2 quarters of history. And I think they may have been asked by the ASX to start doing Appendix 4C. So what I've done is go back through their annual revenue all the way back to 2006. So the peak in revenue was 2008 to 2010, around $60 million in revenue, quite high. But ever since then, it's been going down and down and down and down. So nothing really exciting here when it comes to the revenue of TTA Holdings. Now, this is the very definition of a highly illiquid company, barely traded at all. In fact, it's only been traded on the 25 days during the past year. In fact, if you go back to July, August, September, October last year, it may not have been traded at all during those months. So this is a sort of company you probably don't want to hold. But in saying that, if you go back to the 12th of February, 15th and 16th of February, we did see a bit of a pickup in the liquidity and the share price. So there was a bit of interest in this company going back to those 3 days. So there may be some interest in TTA Holdings. It maybe could turn out to be another Aqueous in the next few weeks. I'm not saying it will, but it wouldn't surprise me because speculation in the markets right now is massive. If you go back 5 years to looking at the weekly chart, you can see that increase in volume over the past week or so, going back 12th to 16th of February. You can see that right at the end there, massive peak in the volume, highest volume traded in a week going back the last 5 years. So again, yeah, this is not a very exciting company when you look at the financials. It's going backwards. It's highly illiquid. No reason to hold this company. Even on Hot Copper, there's only been 2 user posts in Hot Copper in the past 4 years. So even Hot Copper's not interested in this company. So that's all I've got for this video on 3 illiquid ACX microcap companies. Threat Protect, so I'm not sure if Aquis can be considered a microcap anymore. Market cap must be quite high now. Threat Protect, Aquis and TTA Holdings. So even though I'm probably advising not to buy Aquis, I'm not a financial advisor. So any advice you think I'm giving you, I'm not giving you that advice. I'm just doing it for entertainment, educational and research purposes. If you do need advice about Aquis, whether you should buy it, maybe you should seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Bye.